Hello, good morning, everyone. Sorry, we are just a little bit late. Welcome. I'm Luisella Ciani, the director of the European Food Forum. And thank you for joining us today for this European Food Forum event, Navigating US Tariffs, Impact on European Food and Drink Trade Economy and Future Relations. This event is hosted by the member of the European Parliament, Brando Benifei, which is also the chair of the delegation for relationship with the United States, a member of INTA, and a co-founder of the European Food Forum. So 1 year on from the introduction of US reciprocal tariffs and following recent developments at the US Supreme Court, transatlantic trade relations are once again at the forefront of political and economic debate. This makes today's discussion especially timely, particularly for the agri-food sector, where the impacts are real, tangible, and often deeply felt. European food and drinks are more than commodities. They reflect Europe's culture, livelihoods, and consumer trust. In this event, we will explore how US tariffs are affecting European producers and consumers, examine policy responses, and consider how the EU and US can move towards more resilient and cooperative trade relations. We will do this across 2 panels. The panel 1 on economic impacts and sectorial insights, and this panel will be moderated by Astrid Soriano, Managing Director at FTI Consulting EU, and panel 2 focusing on consumers and trade policy perspectives. This panel will be moderated by Maya Doneva, Managing Director at FTI Consulting. So thank you for being with us today, and we look forward to a lively and engaging discussion. Briefly, some words about the European Food Forum. The European Food Forum is an independent, political-led, non-partisan multi-stakeholder forum founded and governed by elected members of the European Parliament. The forum promotes open and multi-stakeholder dialogues on competitive, resilient, sustainable, and innovative food systems among policymakers, food supply chain actors, civil society organizations, research and academia, and other public institutions. The European Food Forum is not taking any position. This is an event of 1 hour and a half, and so it's going to be very intense. Thank you so much for all the speakers that are here. And the Q&A session is going to be at the end to allow the interaction of all the speakers and the audience. Don't be shy. Raise your hand. We are here to have an open dialogue. So I give the floor to Mr. Brando Benifei. Thank you so much.
Thank you, Luisella. Ladies and gentlemen, distinguished speakers, dear colleagues and friends, good morning and welcome to the European Parliament. It's a pleasure and an honor for me in my capacity as EFF co-founder. As Luisella was saying, I want to thank Luisella for organizing this with me, with the European Food Forum as co-host, and with me as chair of the delegation for relations with the United States, and also my political group coordinator for international trade, the Socialists and Democrats group. So I will open today this discussion on navigating US tariffs, impact on European food and drink, trade, economy, and future relations. So again, thank you to the European Food Forum as a whole, to Luisella, and to all the speakers that accepted to participate in this valuable discussion. Here I see there are offices of various colleagues. Some of them might join later. It will be quite important to listen to your positions, understand the various elements on the table, because we are in fact in a phase where together with the colleagues we are discussing and deciding our way forward. Over the past year, the tariff environment has evolved significantly and not always in a predictable way. What was once a relatively stable rules-based system I was myself a few weeks ago at the Cameroon WTO ministerial conference. This environment has been increasingly challenged by unilateral measures, countermeasures, and legal uncertainty. Just last week, we marked, if I may say so, the one-year anniversary of the announcement of the so-called reciprocal tariffs by President Trump. These measures sent shockwaves through global trade, affecting supply chains, creating uncertainty for businesses, and ultimately impacting citizens on both sides of the Atlantic. 1 year later, it is essential to take stock of where we stand. Recent political and legal developments have added further complexity. I was myself in Washington 2 weeks ago discussing this with members of Congress and with the administration. And I also visited the US Supreme Court, which has played a very important role in this story because the US Supreme Court struck down the tariffs imposed under the International Emergency Economic Powers Act, representing a significant turning point. It raises important questions about the legal basis of such measures and the future direction of US trade policy, also for the future. In response, the European Commission has worked to ensure a united European approach leading to EU-US joint statement, and then now also the effort to provide respect for that framework that we have built through dialogue despite tensions. I would say the Parliament is working in the same direction, bringing stability, clarity, and respect for the agreements that we have made. At the same time, I think in this analysis, we need to consider the broader geopolitical context. We are living in a period of instability with crises that are impacting trade flows, energy prices, and also economic confidence and ultimately the economic resilience of the sector we are discussing today. The agri-food sector deserves particular attention because of this situation. It's not only a cornerstone of the European economy, but also central to transatlantic trade. These products embody quality, tradition, and cultural identity. But they are more than tradable goods. They are part of our daily lives and our heritage. Too often in trade discussions, their broader economic, social, and cultural importance is overlooked. To fully understand the impact of recent US tariffs, we must look beyond statistics and consider the people behind them. The farmers, the producers, the entrepreneurs, the workers, the consumers, whom are facing rising prices and reduced choices. This is why today's discussion is so important. Bringing together stakeholders from across sectors is fundamental to identify challenges and also constructive ways forward. Looking ahead, one point is clear. Businesses need stability and predictability. This is especially true for SMEs, which are most vulnerable to trade disruptions. We must therefore work towards a stable and predictable framework that ensures fair access to the US market. At the same time, we must remain ambitious while continuing to pursue exemptions for key products under the EU-US joint statement. Our broader objective must be to return to a more normal, I would say, trade environment. Because tariffs are ultimately taxes. They impact importers, exporters, and above all, citizens. For this reason, it is in our shared interest to move towards de-escalation and to rebuild a cooperative, rules-based transatlantic relationship. My message is always this when I talk with my interlocutors, and I hope that we can take that direction with decision. So let me conclude again by thanking all of you, our speakers, the Food Forum, and all the participants. I wish you all a fruitful discussion. Thank you very much.
Thank you so much, Brando, for this important introduction. So I'm giving the floor now to Astrid to start with the panel 1 on economic impact, the sectorial insights overview of affected sectors. Thank you.
Thank you, Luisella, and good morning all. Yes, so I will be moderating this first panel discussion of today. And this panel will provide a sectoral perspective on the impact of US tariffs and discuss strategies to mitigate these effects. I would like to first introduce our first fantastic panel of speakers. So we have with us today Nicola Marco Tinelli. He's head of institutional affairs at Unione Italiana Vini, the leading Italian association of wine companies. We also have with us Julia Lefferman. She's Secretary General of the Brewers of Europe, representing the European beer industry. And finally, we have with us Louis Hinson. He's Senior Manager, Economic Affairs and Trade and Market Access Lead at Food Drink Europe, so representing the European food and drink industry. Without further ado, we would like to kick off by hearing some initial remarks from you all on the impact of US tariffs introduced by the Trump administration on your specific sectors, so namely food and drink, but also beer and wine, not only in terms of economic impact, but also in terms of the broader societal implications, given that these iconic products are really woven into Europe's culture. So, Nicola, you want to go first?
Good morning. Thank you very much for inviting me. Thank you very much to the European Food Forum. Grazie, onorevole Benifei, for this invitation and also for the attention that you paid at our sector in the last months. We've heard the introduction. The situation for the whole European economy has been really tough, and the wine sector is not an exception on this. First of all, I would like to say that export for wine, for Italian wine, but broadly for European wine, is not an option. For structural reason, we produce more than what we consume internally in our domestic market, so we need to export. And second of all, for the link to the territory, as was remarking by Onorevole Benifei, wine is really linked to the territory of origin. Barolo is made only in Barolo, Champagne only in Champagne, Rioja only in Rioja. So for us, the production cannot be outsourced abroad. You need to maintain rural areas and the production and employment, luckily, in Europe. So when we look at the United States, of course, United States is the largest market for wine in general. For Italy, we rely very much on the US market. It represents 24% of our total export, more than France, which is 20%, more than Spain, which is 11%. So this position of dependency to the United States market put us in a weaker situation. But it's not only a matter of tariffs, it's a matter of uncertainty for companies. We lived last year as a roller coaster, so up, down, but a lot of uncertainty. And this uncertainty, finally, we saw it in the final figures, because in 2025, Italy performed bad in the United States. We lost almost 10% of our turnover in the US. It's more or less 200 million euros. Globally, the EU lost 16% of wine export to the United States. And another interesting figure is that in the second semester of 2025, average price ex cellar of our wines decreased by 10%. What does it mean? That who is paying the tariffs? Partially also our companies, distributors, importers in the United States, but as Europeans, as Italian wine exporters, we are losing value. So this means that we are decreasing value. So there is a lot of uncertainty also on the perspectives, because we saw what happened recently with the ruling of the federal court. It was quite an interesting news. But finally, when it comes to the exporters, what will happen? What will happen in July? This put us in a situation of extreme unpredictability, especially regarding investments, business programs, promotion, because you need to plan promotion programs really in advance. So there is really a situation of uncertainty. I want also to stress this concept that the tariffs is not only what you are going to pay as a tariff, but what we saw also in the 2025 was other economic factors that had an impact, a strong impact in the economic life of our companies: inflation, dollar depreciation, and most of all, the lesson that we learned into 2025 is that no market is 100% sure. You need to diversify, you need to change, you need to distribute the risk. So this is really a lesson that we have learned from 2025.
Thank you, Nicola. Now we move on to the beer sector. So with Giulia, and we would like to also hear more about the positive news that you recently got amid the negative news for your sector, based on the most recent proclamation by the Trump administration, but also the key learnings from that to reduce tariffs in your sector. Thank you.
Thank you. And first of all, thank you for the invitation. Thank you to MEP Benifei and also for the European Food Forum to organize this timely discussion. It is a topic of high concern, and indeed, as we look into the near future, we are equally witnessing and of course trying to understand what will happen next, because we've gone through a time of increased uncertainty with respect to how we trade our products. So first, I represent the Brewers of Europe, which is a sector association for European brewers that accounts for 10,000 breweries across the European continent, and we hope to keep that number and perhaps also increase it in the future. But I would start my intervention maybe not with the positive news, although I would mention that as well, but by saying that European brewing sector is currently at a turning point. And there is a simple but powerful fact that defines that. Today, 1 liter in every 10 liters of beer that we brew in Europe is actually consumed outside of the union borders. Therefore, exports for us are not a bonus, they are a lifeline. And especially at a time when beer consumption in Europe is declining and growth depends so much more on our ability to compete globally. And nowhere, I believe, is more evident this reality than on the US market. The US is, or has been, but still is, our #1 market when it comes to value. Last year alone, the value of our exports to the US were worth 1.2 billion euro. And it is a market where the European beers are appreciated. They are recognized for their quality, heritage, innovation. But then it is also, because of the current discussion on tariffs, it's also a market where we are most exposed today. And that brings another number into my intervention, which is to say that, again, last year alone, the US accounted for 37% of all global export losses for European brewers. And this is not happening in a stagnant market. It's quite the opposite. The US market is, the US beer market for us is expanding. It is projected to reach $260 billion by 2030. So it's driven by a clear shift in consumer behavior. The pandemic recovery has brought back consumers in on-trade premises. Consumers are returning with a new mentality, or treat yourself mentality. They are going for premium categories. They are ready to pay more for a higher quality of beer. And that's where the Mexican beers and the reputed European beer brands come into place. And then this is just to say that for the beer market, the US market is no longer driven by volume. It is currently driven by value. And in addition to that, we're looking at what we call events economy. We are approaching the FIFA World Cup, which is going to be hosted by North America, including the US market. And then the 250th anniversary of the US. Those account for opportunities for massive beer consumption. But then as we look at it, they may very well translate into a missed opportunity for the European brewers. And because demand is high, is increasing, as I explained, but then at the same time, the European brewers are being held back by artificial trade barriers. And we see this clearly in one of the most dynamic segments of our sector, which is the non-alcoholic beer. So the non-alcoholic beer segment is the fastest growing in the US, with 30% increase year on year in 2024. It increases in Europe, but it increases so much faster in the US market. And this is driven by what we call sober curious, the new generation, the young generation, the Gen Z, the millennials, who now view beer as a social tool and not just like a delivery mechanism for alcohol. And then again, European brewers are pioneers in this space. We have invested heavily in technology, in production, in innovation. The non-alcoholic beer today spans across all the beer styles that exist in the market, or almost all of them. And we are approaching 40 million export value. And we should be leading this health and wellness revolution. But instead, again, tariffs are slowing us down. And those tariffs have not been simple or isolated. Now also coming to your question, they have been cumulative. So we had on one side the 10% tariffs on beer, and then we also had up to 50% in 2025 tariff for the package when beer was distributed in aluminum cans. So even where there was a partial relief, and yes, we were happy to see the new proclamation, which finally took off the beer from the list of derivative products of aluminium, where it shouldn't have never been listed. As it happens, can is a very common package that we use also because it's light, and then it allows for exportation. It supports this type of trade. But then even with such partial relief, the damage is real. The cost of entry for European brewers on the US market has been brought at a very high level, and it's no longer competitive towards local producers or nearshore competitors. And if tariff is one problem, there is another problem, which, and I will just echo what MEP Benifei has just said, it's the legal uncertainty, and that might actually be the bigger problem in the space. Because what businesses need is really predictability. You need to be able to plan your business ahead, especially when it comes to trade. And then instead, what we see is constant legal volatility. There is one tariff implemented and then a decision to cancel, and then it is being brought back under a different legal framework. That is a lot of unpredictability for business. And it undermines the entire value chain, from farmers to hospitality. It's not just a beer producer, because it's such a bigger, longer value chain that we are part of. And then finally, what we were concerned was to see that in the conversation of 0 for 0 tariff, beer was left out. We were not included in this discussion. And now we are seeing an even bigger risk in the horizon with the suspension of tariffs linked to the Boeing Airbus dispute expiring in July 2026. We don't know, unless there is a permanent solution, we don't know whether we are heading toward a cliff edge that could bring even higher duties in a very short time frame. Thank you.
Thank you, Julia. We'll deep dive into what can be done to counter these measures later. But first, we would like to hear from Louis, please.
Yes, good morning. And thank you again for hosting us, European Food Forum and MEP Mr. Benifei. It's really a timely discussion. So I'm here representing Food Drink Europe, European food and drink manufacturing industry. We're Europe's largest manufacturing industry, 4.8 million jobs in Europe across 300,000 companies, mostly SMEs. We're also highly trade exposed as a sector. We're the #1 exporter of food and drink worldwide. And now when we zoom in on the transatlantic trade lane, two-way trade with the US accounts for about 40 billion euros annually. And this is also reinforced by substantial cross-sector investment of European and US companies in each other's economies. So any changes in tariffs and uncertainty matter for a large number of companies. So this relationship is truly strategic. It's our second largest export market. It's a major partner across trade, investment, as I mentioned already, but also innovation and integrated supply chains for the agri-food sector and the wider food and drink industry. Our trade is largely complementary. When we look at trade flows, we export a lot of high value added food and drink to serve US consumer demand, and vice versa, mostly import commodities, ingredients that we process further here in Europe, so to keep European production running. For industry, we have indeed a shared interest, predictable rules, workable regulatory cooperation, and resilient supply chains. And that is, and we've heard it before, why volatility is so damaging. It turns our strategic long-term partnership into an unpredictable cost base for operators, making it harder for companies to plan and invest. And looking back at where we were coming from early in 2025 to where we stand today, and it was mentioned, it was quite of a roller coaster ride as regards tariffs. The US EU joint statement of last August, of course, managed to stabilize relations and to help cap the escalation with the 15% tariff ceiling. And while we managed to avoid the worst case scenario with that, it's still a cost, certainly for products that were previously traded under 0% tariff or below 15% MFN. So the capped tariff doesn't mean it doesn't hurt. It does raise costs for US importers and create barriers for EU exporters. And as we heard before, some categories were unfortunately hit by a double tariff for the steel and aluminum derivatives tariffs, which are fortunately removed, as I understand it now, for some categories. So we've been also arguing for that. And then you mentioned the IEEPA tariff ruling earlier this year, adding another layer of volatility for operators, as we're, as associations, but also companies trying to figure out what does this mean for the EU-US joint framework agreement and the capped 15% tariff that we had agreed to last year. And maybe we'll come back to that in the discussion. So from the outset, our ask to policymakers has always been focused on stabilizing relations and de-escalating. And for that reason, the implementation of the EU-US joint framework agreement is essential. We think it's important to anchor this stabilizing factor to create more stability for operators going forward and to avoid further escalation and retaliation. As we said, something that hasn't been much on the radar or part of discussions lately is the longstanding Airbus-Boeing dispute, the retaliatory tariffs of which have been suspended until summer this year. So we would certainly not want this to come back, especially as agri-food has been caught in the crossfire of this dispute that is completely unrelated to our industry and our sector. Maybe to close, next to that, I think it's also important, certainly for EU operators, that we think of building a roadmap to restore market access for EU operators. So we need to identify product categories where US tariff rollback and further liberalization is possible going forward, especially as we do our part to implement the commitments of the joint framework agreement. And by that, I mean the tariff liberalization proposals that the EU is putting forward to improve market access for US goods. So just to close, I think, yeah, the relationship is simply too important to run on recurring tariff shops. And industry and everybody along the supply chain really needs stability and a clear path back to stable and workable market access. Thank you, and I look forward to the discussion.
Thank you, Louis, for these initial remarks and to all the speakers. Now I would like to deep dive a bit more in what industry can do to counter the effects of these measures and preserve its competitiveness. You have mentioned some solutions like diversification in some of your statements. So deeper into that. And I have to ask you to keep your statement a bit shorter, just conscious of time. Thank you. Nicola, you can start.
Thank you for this second question. I will be very brief. So 2 points from our side. So first of all, it's a request to the institutions. Second point, it's the tasks for ourselves as a sector. So the first one is to protect our sector, is to protect our sector vis-a-vis this very uncertain international scenario. I would like to echo the words of my colleagues regarding asking of stabilization of the EU-US relations. This goes a bit beyond trade. Because then it influences trade, but it's a general need of stabilization of transatlantic relations. Use wine as a positive point in the agenda of the EU-US trade relations. It's true that when we look at the trade balance, this is really in favor of us. But if we look at the wine supply chain, EU-US, for per each euro that we export in wine, 4 euros are generated in the American supply chain. So this means that we export as a European Union 5 billion euros, but the American supply chain earn 20 billion euros. So this is really a win-to-win situation. And third, of course, we need to engage again with the United States, bring them back on the table of negotiations, start a second phase of this very complex negotiation, and ensure that wine is included in the MFN clause in the 040 agreement. Second point is a job for us, so for wine exporters. I was mentioning that we are really relying on or dependent on the US markets. 25% as Italy, but if we look at some region, some wine, these are really dependent on the 30%, 40%, 50%. But this is too much. The 5 big markets for Italian wine exports represent 70% of the total wine export. So they are really concentrated in a few markets. 3 out of 5 are in Europe. So that's why, as a wine sector, we always be very active and supportive of having an ambitious trade agenda, of having easy market access when it comes to Mercosur, when it comes to India, when it comes to Australia. So we are grateful to European institutions for making these agreements concrete and real for our companies. Of course, again, United States cannot be replaced so easy. There you have really a strong wine culture in the US, but we need to invest also in India, for instance, and we need to maintain and keep strong also the instruments of promotion of agricultural products, promotion of wine that we have in the common agricultural policy. So let's keep them also strong for our producers.
Thank you. Giulia?
I fully resonate with what my colleague has said, and also to reinforce the message that brewers continue to do what they know best, which is to actually produce in Europe a very high quality beer, and beer remains a global benchmark, and European brewers continue to win also international recognition awards. So we are, as our members are diversifying, but indeed the US market cannot be fully replaced. And that's one thing that we know. At the same time, when European beer succeeds globally, it is not just a product that goes to export. Beer is more than just a drink. It is a reflection of Europe itself, its quality, its heritage, its innovation. So that blend, that is exactly what we hope to see even more reflected in the work of our policymakers. And in terms of expectations, perhaps much more than in addition to what we do, the expectation short term is really that policymakers manage to get to the point where no more harm is done. There should be no further harm. Already the sectors are struggling with the new realities, and we need de-escalation. That's clearly our main ask. We need to ensure that beer, both alcoholic and non-alcoholic, is no longer used as a bargaining chip. amid larger geopolitical disputes. And then in the long term, we should be ambitious. We should aim for the return to the 0 for 0 tariff environment. And that's not like a radical request. It is fairness, it is reciprocity, because already imports of beer in Europe are taxed 0. So there, it's exactly what we hope to be able to achieve with support of the European authorities. For the producers, it's again, it's stability, it's the legal certainty and open markets. That's what we currently need in order to continue to thrive. Thank you.
Thank you, Louis.
Thank you. And a lot has been said already. So maybe just from a business perspective, just to say that clearly the resilience is being put to a test, the resilience of companies in current times, the volatility that we have to deal with, both on the tariff front, but also outside of that. We mentioned exchange rate fluctuations, which also have an impact on the competitive position on foreign markets of our goods, but also the headwinds that we face from geopolitical spillovers, as we're currently seeing at the moment now with the spike in energy prices, which are having ripple effects across the supply chains when it comes to input costs. So this is the reality businesses really need to deal with. Out of that, we can only say, yes, support more opportunities for companies. Diversification is a key priority for companies. The question is, how do you make that happen as a SME or smaller company when you're really resource constrained, where you perhaps depend on a few limited export markets that you've managed to establish over a long period of time, because it does take time to create business relations with importers. It's not something that can happen from one day to the next. And as rightly said, there's nothing that can replace the US market. But in that regard, I think it's very important that we are supportive of the EU's trade agenda that is really striving to achieve that. More opportunities for European companies abroad through the completion of FTAs. And I think that has really been sped up in recent times. So that's positive news for us. Now we really need to see how that can materialize for companies in practice. So yeah, I'll stop here. Thank you.
Thank you very much to all three. And I think we have some key messages for policymakers on how to help your sectors continue to stay competitive in this difficult and volatile environment. And now I'll pass the floor to Maya, who's going to moderate the second panel discussion of today. Thanks again.
Thank you very much, Astrid. Thank you, everyone. We heard some very interesting sectorial perspectives. Now, my task, besides keeping the time correct, would be to broaden those perspectives. And the second panel will basically focus on three questions that we discussed here with the first set of panelists, but we'll hear broader views. And those include your assessment of the current landscape. We heard many times already the roller coaster. What does that mean, obviously, for the agri-food sector? We are in the European Food Forum. We would like to hear all the different perspectives about the challenges, about what are the risks, what needs to be mitigated, and of course, look into the future. So what are the longer term strategies that we should adopt? What are the shorter term actions that we need to take? Perhaps we will finish with one, recommendations, as we have also the honor to have a commission speaker with us, and one key ask as well. So I will briefly present the speakers today. So we have Thomas Leiflander, who is a deputy head of unit from DigiTrade, in charge of US and Canada. We have João Albuquerque, Director for Advocacy and Public Affairs at Eurocommerce. We have Olivia Brown, who will present us the consumer perspective. She is a policy officer at Euroconsumers. We have Edward Kopieters, who is a senior policy advisor at AmCham EU. And we have Iliana Axiotiades, who is a Secretary General at COSERAL, which is the European Association of Traders of Agri-Commodities and Agro-Supply. So you see, we have a very diverse set of speakers. So without further ado, perhaps we kick it off with Thomas, who will provide us with a broader perspective. And we were supposed to have a colleague of yours from DG Agri. We'll be very grateful if you could deep dive a little bit into the agri-food aspects, as long as this is possible. Thank you.
Sure. Thank you so much, and good morning to everyone. Thank you for inviting us to participate here. Very happy to be part of this panel, though I am maybe not so happy with the arrangement of the table, since we have me sitting on this side and everybody from the industry on the other side, which makes it seem very confrontational. Whereas I think, in listening already to the perspectives presented this morning, that on many of our assessments in terms of where we are, what the challenges are, what we're hoping to achieve, we're very much on the same page with you. So let me start with just a high-level overview of where we are. Indeed, many of you mentioned the roller coaster of last year, the need for businesses to have certainty, predictability, to stabilize the situation, to avoid escalation. And that is, of course, exactly what the Union and the Commission tried to do last summer in agreeing to a deal with the US administration to stabilize as much as possible, to create as much clarity of the applicable regime going forward, and to create a basis on which we can work constructively in a de-escalated environment with the US to take forward other policies, not only in the trade space, but beyond. But of course, in the trade space, we do have ambitions that go beyond. There are multiple mentions in the joint statement of further work on further exemptions, working together on the steel sector, for instance, to work on the tariff regime there. So there's lots of work that's anchored in the joint statement. And to create a basis, we really need to get to a baseline stability. Now, as all of you know, I think stability is relative in this context. I think we have achieved an important measure of that. Again, if you look at the roller coaster that was the last spring, I think the amplitude has reduced. The degree of variation has reduced, but it doesn't mean that we have full clarity and complete stability in every single line. Many of you have already mentioned the Supreme Court ruling from February, which upended a key part of the US administration's policy by essentially annulling the tariffs based on one particular legal statute. Didn't concern all the tariffs. There are many other tariffs that are based on different statutes that were unaffected by this. The administration moved very quickly to replace those annulled tariffs with different tariffs on a different legal basis. They're structured somewhat differently. For the EU, the headline message, as you know, was that we moved from what was agreed as a 15% all-inclusive tariff to what is now a global tariff of 10% plus MFN, which is, if you look at the whole structure of our exports, the full array of the 500 plus billion euros of European exports, broadly comparable, actually in many ways slightly better, but for a certain number of products, including many important agricultural products, it's slightly worse. We know that the US administration is aiming to recreate the tariff structures that were agreed under the various deals, including with the EU, that the current measures are, in their own terms, transitional. And we've been reaching out and engaging with the US to ask for as much clarity as to how is this going to go. Can you give us assurances as to how the tariffs will be restructured and so on? But we recognize that for the time being, there is some uncertainty as to how exactly that's going to go, when the new tariffs will come into place. Current regime will lapse in July. We assume, and that is what we hear from the US, that by then the replacement measures will be in place. And again, we're very much holding the US to upholding the deal. Now, of course, that also involves some action from our side. The Commission very much welcomed that the Parliament just before Easter managed to adopt its mandate for the legislative process, the trilogues, on the two regulations the Commission proposed to reduce tariffs on US goods. That was something that we committed in the deal from last summer. And we're very much looking forward to taking this process forward now with the co-legislators. I think there's still some difficult work ahead there, but we think it's really important to advance this, because we do see that showing our commitment to the deal and doing our part of the deal is the best basis to then also work further with the US, both on making sure that they are complying with the terms of the deal as agreed, but also to set up those further conversations on further exemptions on steel to keep that positive conversation going, not stop here, not let the ambition die. So we look forward to carrying this forward, and certainly will continue the negotiations. Again, fully mindful of what you're saying. Predictability, certainty are very important. We are seeing, as we saw last week, with the changes to pharma tariffs, the changes to the 232 tariffs on steel and aluminum, that there is a certain degree of, let's call it, dynamism in the US tariff landscape. I think that is a fact of life with this administration. But again, we think that in the deal that was agreed last year, we have the contours of the regime in place that provides at least a base rock of stability for what the landscape will look like. I'll stop here for now, and we'll go into many more things in the next few questions.
Wonderful. Thank you very much, Thomas. Now we'll go back to the private sector. So Joao, I will turn to you to give us your perspective, your main takeaways from this roller coaster period, as well as the challenges that you see for the retailers and wholesalers. Thank you.
Absolutely. Thank you very much. And there's definitely no confrontation between the private sector and the Commission. We are very happy to be here and to listen to you, and of course to engage and cooperate in many areas. This is one of them, of course. I think, like everyone, not just as a European association, but as a citizen, the disruption and the unpredictability affects us all. And of course, for Eurocommerce, we have a very privileged perspective and overview of what the consumer trends are and what the consumers are looking for. And of course, the main concern is obviously the price and the price increase that's comes from all of this. Not just from the tariffs, but of course from the geopolitical situation that we are currently living, that adds on the pressure of the markets of the current situation or relation between the US and the EU. We identified three main challenges, I would say, on this, most of them related to the cost and, of course, on the difficulties of not passing on to the consumers the costs that are derived from these tariffs. The first is the lack of predictability. I think this affects us all. Tariffs are increasingly introduced or adjusted at short notice, often driven by geopolitical tensions or industrial policy shifts. And of course, this leads to unstable import prices, margin pressure in low margin sectors such as ours, and difficulties in not passing on higher costs to consumers. So this is the first one. The second is, of course, disruptions to supply chains. This is also a problem. Tariffs create friction in highly optimized global supply chains, leading to forced supplier shifts, increased time and cost in establishing new sourcing relationships, and a greater need for buffer stocks. And of course, as businesses, we cannot plan or price reliably when trade conditions change unpredictably. And finally, the third challenge that we identify is that tariffs often involve extra requirements like rules of origin, compliance checks, and documentation duties. And this raises costs, takes time, create more obstacles to market entry. And in a sector as ours that is also anchored a lot in SMEs, this especially impacts them as they have fewer resources to handle this complexity. So all in all, it really is an issue of how do we absorb the shocks and not pass it on to consumers, which are already highly pressured. And we can see this, of course, from consumption trends, that price is still the main driver on the choices for consumers. So this is the main challenge that we have at the moment.
Thank you very much, Joao. I think that leads us very smoothly towards Olivia. And my question was exactly about the consumers. What are the current perceptions? What are the main fears? We discussed in this the pricing element, which is still a determining factor. And I see also in front of you documents. If you can talk a little bit more about that and the consumer trends. Thank you.
Sure. Thank you very much for having us. As you mentioned, I'm here on behalf of Euroconsumers. So we're a global group of consumer organizations with members in Belgium, Italy, Spain, Portugal, Poland, and Brazil. We are all membership-based and testing-based organizations, which gives us a direct line to consumers. We like to say we have a finger on the pulse of what they're thinking. So indeed, I'm here today to talk more about the consumer perception of the geopolitical turmoil we've been talking about in different contexts. I have some survey reports with me, not a lot, but a few that I'm happy to share, and you can also access the full report on our website. For context, earlier this year, we were witnessing the situation in Greenland, there was a situation in Venezuela. These were all a series of different events that consumers were kind of just in the throes of. Consumers are not really seen as direct actors in these situations, but the implications are hard felt. So we thought it was time to ask consumers how they really feel about what's going on with the geopolitical situation. And as was mentioned by MEP Benifei, we had the anniversary of the tariffs coming up, so there was a lot of different moving parts. So we carried out a large-scale survey of about 10,000 consumers across 10 European countries, and this ranged from our members in Belgium and Italy, Spain, Portugal, Poland, but also Hungary, Ireland, Denmark, to get a full range of what European consumers are actually thinking. When we ask them about the EU-US relationship, what we see is a clear shift in sentiment. We've been saying colloquially that the honeymoon period is now over. 28% believe that the US only 28%, sorry, believe that the US will always be a reliable partner, and 51% believe that the transatlantic relationship is fundamentally broken. As a small disclaimer, I have a lot of stats, so please forgive me. But I think these data points are important to give a sense of what European citizens are actually thinking. When we look at the tariffs specifically, we see that consumers really understand what is happening here. Nearly 3/4 see US tariffs as a form of political pressure, and 70% think the EU should respond in kind. 44% of consumers have said that they have stopped or reduced buying American products and services. So for consumers, this isn't an abstract concept. This is something that's real, and that they're adjusting their behavior accordingly. One of my messages I want to put across here is that consumers are not anti-American. They're pro-European. They want to see a strong Europe taking a stance. They want the EU to define the terms of their relationship. 28% so far felt the response hadn't been adequate, and 2/3 say that the EU should not give in to US pressure, even if this leads to higher prices. I welcome the remarks from MEP Benifei this morning to say that de-escalation is a priority, and that's something we also see with consumers. But consumers are very clear on one point, and that is that EU standards should not be used as bargaining chips. This hasn't been mentioned in the discussion here today, but in the media we see a lot of talk around digital legislation. 56% of consumers we surveyed oppose loosening food safety rules as part of the tariff negotiations, and 52% oppose weakening digital protections. So overall, we're seeing not a complete rejection of the transatlantic relationship, but a clear expectation that it needs to become more balanced. We need a more assertive Europe, and it has to be firmly anchored in European standards and interests.
Great. Thank you very much, Olivia. That were a lot of very interesting stats. I'm sure that everyone will deep dive a little bit more into the figures and digest those. But indeed, sometimes consumers' perspective is not very well voiced. And I think this brings a lot of clarity and kind of needed knowledge on the consumer perspective. I will go back now to the business and would like to introduce Edward Koppieters. Please, your perspective on the roller coaster situation and the main challenges that your members see and recommendations if you have any. Thank you.
Yes, no, thank you. Indeed, a roller coaster. I think that there's nothing really new that I'll be able to add on that part. I think that like even for us in a噚ordability and for the few people that might not know us, we represent American businesses that are invested in Europe. So our members are very much at this sort of bridge between the EU and the US, and a very integral part of the transatlantic relationship. And for us, it's also this has been a roller coaster, difficult to adjust to. And I think that like there has been a lot of work of rethinking where we actually stand and realize the fact that there has been a paradigm shift within the relationship between the US and the EU. We are not where we used to be. And there's an important amount of work that needs to go into recognizing that. And in that particular context, I think it's good to point out that the deal that we have on the table is actually good. It does create this stability. The votes that we saw from the European Parliament are a good signal for companies. So is it perfect? No. We, generally speaking, oppose broad range tariffs. We don't think that this is something that creates an added value. It does, as all of the colleagues at this table have already very eloquently explained, it doesn't create stability. It's negative, generally speaking, for businesses. But again, this is looking at where we are, in which situation we are in now, and realizing that that these are the cards that we have on the table, and this is what we need to deal with. And I think that in that context, it's also good to highlight the fact that despite the headwinds that we've seen in the past year, and the tensions that we might have seen between the EU and the US, a lot of numbers show that the relationship between the EU and the US remains quite strong. And that is with already in 2025, 1.4 trillion euros in volume between the EU and the US. So actually exports from the EU to the US in trade of goods, which is still a growth compared to what we were seeing in 2025. So although the growth is not as big as what we would have hoped to see, we are still seeing that there's significant investments that are being made on both sides in both of those markets, really reiterating the fact that both of those economies are so intertwined. And I mean, we still have the figures of 2024. I don't have the final ones for 2025, but in 2024, it was the relationship and the trade relationship amounted to 9.4 trillion euros and more than 5 million jobs. So again, highlighting the fact that this is a relationship that we cannot do without, in a way, on both sides. And to that, I want to echo some of the words that have been said by the colleagues on the sectorial front, which is, of course, the US is extremely important, is an important market. And we were just hinting at the fact that the new trade deals are being discussed in Mercosur, India, Australia. Those are extremely important, not because they're going to replace the US market, but because in a context where the relationship changes, it's important to diversify and to treat food as the strategic good that it is. So you need to be strategic about it, diversify your relationships in order to make sure that you can absorb potential shocks. And this is what it is about. It is about, again, realizing where we stand in the relationship and acting accordingly. And I would like to also reiterate all the calls that have been made by the colleagues of de-escalation, and hopefully in the longer term, mid to longer term, coming back to something where we don't have any tariffs. And the point that was made by our colleague from Food Drink Europe of a roadmap is definitely something that we would support as well. Looking at concrete steps that we can take in order to get back to something that is even more stable and more beneficial for businesses.
Great. Thank you very much, Edward. And now I would like to pass the floor to Ileana. The question is the same.
Thank you very much. I wanted to come back to myths on the consumers. It's not surprising, but I find, because we hear this around us, but I think we must not, you talked about a paradigm shift. I don't think we should see it like this. It's just a general comment. I think, the US is a, long-term partner. We have a lot in common. I was thinking yesterday when I was preparing this, it was built on the basis of a war with the British and the French, but that did not, prevent them from building very strong relations with these two countries. So I think we should see what we're going through now as a transition period. And not look at it as a paradigm shift, but as a hiccup in the history of trade relations with the US. And I'm going to use also some statistics. I think numbers are important. So as Maya said earlier, COSARA represents trade in agri-commodities, which is really cereals, wheat, corn, soybeans, oils, animal feed, etc. And the US is very, very important for mainly two commodities, which is soybeans and corn. So the EU imports 11% of US soybeans, which is a lot, really. It's a primary supplier of soybeans to the EU, competing with Brazil. In 2025, we imported, the imports from the US represented 53%. So this is a lot of volume. We rely on this country. And soybeans is number 2 agriculture exports to the EU from the US. So again, we are a very important trading partner with regard to soybeans, but also with regard to corn. The US represents 20% of total EU corn imports, but we have to remember that, for example, Spain imports more or less 63–70% of its consumption. Italy is above 50%. So some countries rely very, very much on imports in order, it's very much animal feed, but it's also oil crush and it's other starch industry as well, uses corn in Europe, relies on imports. So it's interesting that we talk about Mercosur, but for us, diversification, yes, but you have climatic events, big drought, you can have high mycotoxins because of certain conditions. So we need to have access to all the markets, because depending on the situation and the context in one year after another, we may have to source in one country rather than in another. So I think diversification is one thing, but access to many markets is another thing. So we were not hit. These products were not hit by the tariffs, but there was a lot of uncertainty that was created because we benefited from the suspension. We were getting calls from the traders until last moment, what will happen? We're expected to guess for everyone. And if you think about it, it was published 6th of February, 7th of February, it entered into place. And now we only have a reprieve of 6 months. We have 4 months left, and we don't know what's going to happen. And I understand the challenge. I understand the difficulties, but I think this is something that, I'm only repeating what others have said, is predictability. Thank you.
Thank you very much, Iliana. You made a very nice transition to the long-term strategies and what do we actually need for the future. Talking about diversification, many people around the table mentioned that. Thomas, I'm turning back to you, perhaps to comment on that and perhaps some other strategies that you see.
Thank you so much, and thank you all for your comments. Indeed, diversification, I think, is a cornerstone of the trade policy these days. You've seen since the entry into office of the current commission a huge amount of activity, concluding very long-running trade negotiations, some very difficult Mercosur, India, just now Australia. We have other negotiations in the pipeline. Some are still going through the final stages of legal review, Indonesia, Mexico, etc. So a lot of activity, certainly more than you've seen probably in decades in terms of just the volume of things going on, which shows you that clearly there is the full political will to give business options, to open up markets, to create additional opportunities. And I fully echo everything you've been saying, that the US market, the relationship, the size, the importance is here to stay. It's not going to go away. And nobody in the Commission, nobody in DG Trade is pretending that any of these deals will replace the US market. They're not intended to do that. They're intended to create new opportunities. They create options for businesses to navigate a broadly changing global environment, to have strong partnerships, rules-based, predictable, with clear expectations for businesses that you can rely on to navigate this global context. Now, if we look maybe a bit more closely, and many of you have mentioned already the numbers on how has EU-US trade actually developed over the last year, I think the surprising headline figures that EU exports to the US have actually increased last year. So if you look at the total amount of exports, I think it's gone up by about 3.5% in 2025. Of course, that's a simple global headline. If you dig down into sectors, it becomes a bit more complicated. If you dig down when this trade happened, was it at the beginning of the year? Was it at the end of the year? In which month? Was it before or after the deal? It becomes more complicated. So if you want to say, broadly speaking, exports have held up in some sectors more than others. I think in the agricultural products sector, we've seen a decrease of exports, while at the same time seeing a small but nevertheless significant growth of exports globally, which is running against the broader global trend of agri exports. So mixed picture, if you will. What would be the long-term effect of this? Again, we've spoken about the roller coaster. Do we really already know whether trade is settling into a new structure? Probably a bit too early to tell still, since the effects of the deal, the effects of some of the tariffs, some of the ongoing negotiations on changes, some of the changes that are happening in the US system by itself will have to be integrated. So I think it's still a bit too early to say exactly where that trade will go, what will be the structural long-term effects. Will we manage to take that positive platform further and negotiate further reduction of tariffs, which you all know is our ambition. We want to reduce tariffs as much as possible. There we will have to see. Now, turning back more broadly, and here I will try to replace my colleague Miltos from DG Agri, who unfortunately couldn't be here. He was much more well versed in the global trade politics of agricultural trade. I think what you see in all these trade deals that we're striking, and what you do also see in the deal that was made with the US last year, is that I think the Commission is doing overall a very good job in opening markets for our export interests, while at the same time protecting the sensitive sectors at home. So when we look at what the EU committed towards the US, there are some small market openings to agricultural products, but none of them touch on our real sensitivities. The same is true with other sectors. Then if you look beyond pure trade policy, of course, there's lots going on in DG Agri, the vision for agriculture. You saw that some of our recent trade deals, Mercosur specifically, come with specific safeguard provisions to take account of this. So really trying to strike that balance between, I think one of you mentioned, protect industry at home while creating opportunities abroad. Now, what we as the Commission, as DG Trade, can do is we can try to create those opportunities for you. But of course, it's businesses who have to actually go and trade. We're not directing businesses as to who to trade with. So what we're trying to do is create those options, but then also listen to you as to what you really need, what's happening, what's holding you back. You know, one of the other partners I deal with on a day-to-day basis is Canada. And I know this discussion is not about EU-Canada trade, but we have a very successful trade agreement in place there. And yet we keep hearing from businesses that Canada is, you know, not their primary target market. And we really want to understand what's holding that back. Are there regulatory things? Are there things in the structure of our trade agreements that are obstacles? I think one of you mentioned administrative burdens, rules of origin, all these other things that come with trade rules. So we want to set good frameworks that make it possible for businesses to make best use of these opportunities. And we do want to hear from businesses if there are things there that we can still nudge a bit to make it easier.
Thank you very much, Thomas. Now moving to Joao on the same question on diversification, but also other long-term strategies that you see from your perspective, and perhaps because I see the time is up, any particular ask that you would like to highlight? Thank you.
I will be very, very brief. I will just greet Brando. Life keeps on putting us on the same track for the last 10 years. It's very good to see you again. I will skip the diversification because I would echo the same words that have been said, but I want to emphasize that this is, of course, one of the first priorities that we see on the table, together with another one, which is the full implementation or the greater use of the existing FTAs. I think there is still room for improvements, namely in terms of simplification and better implementation, which would be already good. Thirdly, I would emphasize that as a sector, we do tend to source locally, and by local, it's not only just on the national and the regional markets, but also local for us means the whole single market and the European Union as a whole. And of course, strengthen the relationships with the producers and our sources is extremely important to strengthen and to be stronger in this unstable period. The fourth one is investment in resilience. Nobody has talked about resilience, so I'm bringing the word forward. Resilience and digitalization. It's something that our sector is investing tremendously, and we want to continue on this to improve forecasting and investing in better data to adapt to the situation. And I will conclude with I think what is one of the main priorities that we have that has not, I think, been touched upon yet, which is the fact, and this is estimation from the IMF, that the existing barriers on the single market account for 44% or equal 44% tariffs for goods and 110% tariffs for services. And I think the potential of the single market is the biggest obstacle that we have in terms of instability. It's something that we need to account for and to make sure that we continue to have one of the main pillars of the European Union as a core of the project of this union, because it is what gives us much more strength in terms of resisting the shocks that exist elsewhere. So I would say that removing the existing barriers, we have identified 10, at least the main 10 barriers of the single market, is a very important way to move forward with completing our union and to make sure that we are no longer working in silos and that we are, despite of the sourcing, that we can actually have the full access to 450 million consumers and leverage the power of what this means for European companies. So especially for our sector, which is a sector that is deeply rooted in Europe and does not relocate.
Thank you very much, Joao. Olivia, do you have anything to add from the consumer side?
I mean, I know diversification has come up a lot, but I do want to echo that for consumers, that's something they do support. You know, in response to everything that's been going on, we're not seeing that consumers are looking to turn inward. In fact, they're looking for more trade agreements. They see trade agreements as beneficial for companies, as export opportunities, but also in access to innovative goods and services. This is a big part of how we're working at Euroconsumers. These goods need to be affordable as well as responding to what consumers want. That would be my second concern to flag, that we really want to see affordability considered as a strategic concern, a strategic objective in trade deals, but also in broader policy, to be quite honest with you. We work around this idea of empowered consumers, and if you'll forgive me for a second, I promise this will all add up. An empowered consumer is someone who is able to access the goods and services that they need at a given time at a price that works for them. So that means having access to a diverse range of goods and services. That means having access to broad trading partners, in order to make sure consumers can act, because consumers are not just a passive actor in the supply chain. If we want this competitive, dynamic, strong European market that we're all striving for at the moment, we cannot ignore consumers, and that includes in trade policy as well. Lastly, I would like to echo that consumers also support the strengthening of the single market, but I would also here again highlight the affordability angle. In the survey, we asked consumers how they feel about made in Europe, because this is also a hot topic that's coming down at the moment. 76% said they would like consumers to prioritize buying European products, but only 2 in 5 are willing to pay more for them. This for me is the perfect example of what consumers are grappling with right now. Yeah. Thank you.
Great. Thank you very much. Edward, you touched quite a bit upon the other trade agreements and diversification, but anything else you would like to add?
Yes, actually, especially because having the Commission in the room that has asked us directly what we really need, you don't need to tell me twice. So we obviously have a long list, but I think generally speaking, we're speaking about this diversification. We're speaking about other trade deals, and obviously when we're talking about those other trade deals on which we are working, we need to also look inwards of like what we can change and how we need to approach those, particularly regarding our own legislative framework, right? And there's a question also of predictability within the EU, making sure that when we are moving towards having a free trade agreement, it's actually implemented correctly, and we don't, let's say, overuse the dynamic alignment clauses of free trade agreements. I think that if you're talking with third countries, and there we're sort of like moving away of just it being a US issue, this is much more of an issue for, generally speaking, third countries, is aligning with new legislations that is coming out of the EU without proper impact assessment. I think recently one of the debates is about maximum residue levels, and there's some work that is being done on this. but we're still waiting for an impact assessment. We can talk about the EUDR, which is a non-tariff barrier when it comes to access to markets. And that is about a legislation that is not fit for purpose as it stands and is lacking a significant amount of elements in order to make sure that companies can implement it. So yes, stability, predictability, and we're talking about tariffs, but predictability doesn't come just from making sure that we have a good vision on tariff. It also comes from some of the output that we have within Europe as well. So, and then I just wanted to have a quick note on the Made in Europe, the Made in Europe point, which is obviously a hot topic for us as well. And I think it's important to also look at the agri-food sector in Europe and like realize that we're not operating in a vacuum. Everyone that is outside of Europe still significantly contributes to the creation of the wonderful products that we are able to sell across the global market, and moving into a direction that is sort of protectionist and very Eurocentric is not a solution when it comes to actually moving towards a more predictable market. It's actually keeping up with this diversification, making sure that we actually have solid relationships with other third countries, that they understand that when they are investing in Europe, it's going to be a predictable market, and that when they're signing a deal, it is something that is going to stick and not evolve in a year with something that they're not going to be consulted on. I think that's also something that is important to look at, is to say, when we are looking at our legislative framework and how it impacts our trade partners, too often we're bringing in the opinion of third countries at the very last minute when it's too late. Perhaps there's also something that needs to be looked at when it comes to making sure that our trading partners are aware of what we are doing here in the single market.
Thank
So,
you. Can you wrap up, please?
yes.
Because we need...
So this is actually the concluding sentence is, what do we really need? Well, addressing non-tariff barriers, sorry. More harmonization, we mentioned it as well, like having avoiding a one size fits all approach doesn't mean having 27 different regimes. It means actually harmonizing the single markets and making sure that we account for different elements, and then legal certainty in a broad sense.
Yes. Thank you very much. Very clear. Iliana, do you have any final words?
Thank you. I'll be
Wrap up.
quick. Three
Thank you.
points. Well, one was the improvement of existing trade agreements. This is the opportunity to work, to make other agreements work better, and maybe be open to reopen, to look at certain aspects of some agreements, because certain products are suffering today that were not suffering earlier. The second one was, well, the member state, it's not so much, it is the internal market, but the challenge we see is interpretation at imports is different by different member states. So at the end of the day, whether if you import in certain country or another, you may not be faced with the same interpretation of the law. And this really must stop, if I may say it like this, and it's part of trade. And the third one was that we're talking of simplification of legislation, but if we look at the omnibus, it is supposed to simplify, but it sneaked in certain provisions that are not helping with regard to imports into Europe. And I think the Parliament has a role to play there, if I may. And the other thing is also the EUDR, because I talked about the importance of importing soybeans earlier, and AmCham also said it. It's certain provisions in this legislation make it nearly impossible for the supply chain to work properly, and we have a real worry about imports of soybeans, of having sufficient EUDR compliant soybeans. And I said earlier, some countries heavily rely on imports like Spain and Italy. Thank you.
Thank you very much, Iliana. Now it's time for a quick round of questions, maybe one or two to maximum. So any burning questions, because I'm afraid, dobbiamo one question, very quick. Yes.
Thank you.
Can you present yourself also? Thank you.
Hi, I'm Pauline Bastidon from Spirits Europe, representing European spirits producers. As you know, we had a 0 for 0 agreement that created a growth of 450% on both sides of transatlantic trade in spirits for 20 years. we'd like to go back to that. What's the prospect of returning to that, in your view? The other thing is that we're obviously realistic, and we know that stability at this time is probably the most likely scenario, but we're also worried about the potential return of tariffs in the Airbus dispute. So what's your view based on talks you have with your counterparts? We were in the US recently, but we didn't get much in terms of their thinking on this. Thank you.
I think that was directed to you, Thomas.
Thanks for this question. And of course, we have ongoing conversations with Spirits Europe at all times. Look, you know that we were disappointed last year as well that we didn't manage to extend that as part of the deal. It is, along with other sectors, on our radar for the ongoing discussions on further exemptions. I think, as I said, from our perspective, the best we can do at this stage is to advance on our legislative track to make sure that we put our part of the deal onto the table. Again, we very much welcome that the Parliament is now ready to move to the trilogues. Those will kick off rapidly, and then we will leverage that to say, okay, well, now we have done what you've been asking for all along. So let's now get into the other parts of the joint statement, including the conversation about other exemptions, and let's get back to this. Now, can I give you a clear prediction as to when that would happen? Will it go in one way or the other? What precisely will come of it? No, but I can assure you that it's not forgotten. We keep coming back to this conversation, and spirits, wines, other agri products will be on that list. On the LTA dispute, there are ongoing discussions. You'll forgive me if I don't want to speculate too much, but do let me reassure you that, of course, we are conscious of the concerns of business in that respect, and how it relates to the broader quest for stability, certainty, and let's say de-escalation in the relationship.
Thank you. Thank you. I'm afraid that Mr. Benifei might have other meetings, so I would like to give him the floor for concluding remarks. Before that, I would like to remind just if you would like to become a member of the European Food Forum, please turn to Luisella. I think you do have the contact details, and I would like also to remind you about the next events, which are Food and Feed Omnibus, which will take place on 6th of May. 13th of May, we'll have an event on animal welfare. And we do have 9th of June, an event on EUDR that was mentioned several times. So I promise it's very interesting discussions upcoming. Please, Mr. Benifei.
Thank you, but also because I think we have a limited time with the room. I know how the Parliament works, so I will be brief, but thank you, first of all, for all the insights. I think we should have got a better deal on spirits, to be very frank, but that's what we are seeing today. And to be honest, the Parliament has been strict and will be very strict in the trilogues, because we do not want to see everything unravel suddenly. We know that for your sectors, it's important to get something, whatever it is sometimes, because the risk is to just have a total uncertainty. So better a bad certainty than a uncertain uncertainty, if I may say it like that. But I think we need also to look a bit on the midterm perspective. So that's why, on one end, we are pushing for getting through new markets to be opened. So we are working on India. I was myself there already a couple of times before and after the signing of the political deal. We are working on Australia, as you know now, with the new developments. There are, important opportunities coming from the Mercosur that we are now seeing advancing, even though with some issues, as you know, to be completed. So we have different streams of work in this sense. On the other hand, on the tariffs with US, I think the Parliament has rightly demanded to have clear safeguards on the maintenance of the conditions, which I think need to be clear, and they are the base to work on further concessions. I think we need to be credible that we are not going to accept forms of blackmailing, to use the correct word, to be frank, because otherwise I think we will risk losing, for example, for your sectors, if tension which might rise on, for example, the digital legislation could increase at some point, because we know this might happen. And so we should protect the conditions we have obtained for certain sectors, like the ones that are represented today, from the tensions on other areas. To be honest, we cannot just say don't have the tensions on the other areas. They will come. So we need to protect what we obtained in certain areas. And that's why the Parliament has insisted on a series of safeguards. I had the chance to talk about this directly with Ambassador Greer, the trade representative, just a few weeks ago in US, and I've been honest. It's our effort to save the degree of stability that we have built, because without what the Parliament has now voted and will defend in the trilogues, it's difficult for us to have the votes in Parliament. Please don't forget about what happened with Mercosur. In the European Parliament, except from the French leadership of the political groups, all the leaderships of the main political groups of the pro-European majorities was in support of advancing the Mercosur, and then 12 votes put the Mercosur on hold with the Court of Justice. Only 12 votes of difference. Do not risk the trade deal, which would be in a difficult situation. I don't need to tell you how much unpopular is in this Parliament. Right or wrong, it's a fact. The Trump administration in this Parliament, how unpopular it is, to be very frank. So there is always a risk that things will unravel. It happened with Mercosur against, I insist, the predictions of the main political groups' leaderships. So we are risking that. I was very frank with the American negotiators on that. So I think some safeguards will need to be there. We know there will be a negotiation, so it will not be exactly the text of the Parliament, but something must be there, because we need to reassure also our constituents, because I know I got the notes from when I was not here. The presentation of the study on the consumers is clear. Our consumers want us to be firm and want us to be clear on the interest of the Europeans. And I think that this is something we need to put together in a balance that, first of all, preserves stability, because I know that predictability is the first thing that needs to be preserved, and this will be our effort. So thank you, and I hope we will continue working together for a stronger, better, more stable, more effective, because it's already such a cornerstone. It's been said, transatlantic economic relationship that will benefit the sectors that are here today on both sides of the Atlantic. Thank you very much.